All right, back to work. Thursday evening already. It's been a fantastic week in our trade room. Hope you guys had a fantastic Thursday as well. But it's back to work tonight, getting ready for Friday's trading session. Got a lot of great trades setting up for finally Friday. As always, I'm going to cover my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. Before we jump in and get this party going tonight, as always, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoy the video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Friday. Get some nice trades setting up to finish up the week here. It's very similar to last night. We got a bunch of ranges on these charts here. Range on the Nasdaq, range on the S&P, range on the crude oil. I mean, personally, I would like to have every day be a range day. To be honest with you, I love ranges, right? We're buying low, we're selling high, we're trading rotation, looking for breakouts. I can definitely see some possible slingshot breakouts going higher on the S&P and the Nasdaq. Got some nice breakout targets going higher as well. I've also got some great levels down here on the E-minis for some reversals. So really like a lot of the setups we have looking forward to tomorrow on the Nasdaq and the E-mini. Crude oil is bearish into a range, so kind of the same idea, right? Looking for some moves going lower. I could easily see some continuations down to possibly, dare I say, the 100 big round number. And I can also see some chances here now for some reversals back up to that 105. And maybe if these bears get in trouble, a breakout back up to last week's close. Got some big targets back up there at 110. So I'll tell you right now, if you thought this week was slowing down, you are mistaken. We have plenty of great, reliable, potentially profitable trades setting up to finish up the week tomorrow on Friday. And speaking of Friday, let's not forget, we do have some news tomorrow morning. Tomorrow's a Friday. Fridays, what you want to remember on a Friday is there's no hard and fast rule. I don't believe in the whole thing. Well, you can't trade after this time. I'm not really a big believer in rules like that. Remember that Fridays are known for being a smaller window of opportunity. So if things are slow, remember that metaphor. Trading is a lot like riding a bicycle. It's easier when it's moving. So if we're getting good price action tomorrow, trade those setups. If it's slow, if it's sluggish, I always say go half size, go quarter size. Trade smaller size if the personality is a bit sluggish tomorrow. Hopefully we have a nice busy day tomorrow throughout the entire session. Now there are two events you want to be aware of. First one is Bullard or James Bullard. He of course is a voting member of the FOMC crew. This is a keynote speech I believe it's in Switzerland tomorrow morning. The reason why I mention this is because everybody is just so obsessed right now in these markets with the Fed speak about inflation and what they're projecting. So we may have a nice, good catalyst to really get this stuff moving tomorrow in the pre-market. So I will definitely be checking headlines to see what he said when I get back to my desk tomorrow. Hopefully he says something provocative and we can get these markets really moving into that opening bell tomorrow morning. And then later on in the morning, the home sales number, we're all kind of waiting right now for the higher interest rates, the higher prices on homes to start to bring those home sales down. We didn't see it, if you recall, we didn't see it earlier this week. We didn't see existing home sales get hit on Tuesday this week. So you have to think traders will be looking closely at that home sales number. My personal opinion, I usually find my best trades on pretty much every day of the week between 10 o'clock and 11 o'clock. So I'm really looking forward to that new home sales number tomorrow at 10 o'clock Eastern time. So again, don't push it if things are slow early in the session or late in the session tomorrow. Hopefully James Bullard will light this thing up for us nice and early, and then those new home sales number could be a little bit of a shot in the arm to keep us going into the weekend. So we definitely do have some good options for Friday's news catalysts. And of course, as always, here back to our charts now. Nasdaq's ready, S&P's ready, crude oil is ready. Now, whether you trade one of these markets or you trade all of these markets, make sure you watch the entire video here tonight. You're going to learn something new throughout the entire video lesson. I'll provide different trade variations, different advanced tactics as we go deeper into this video. And you know me, I try to save the best stuff all the way to the end, so don't miss the ending of this important video lesson here tonight. Let's jump first, of course, as always, into the Nasdaq, the NQ, or like a lot of our students right now in our trade room, the micro Nasdaq or the QQQs, right, or the inverse ETFs, whichever is your fancy. Nasdaq is bullish right now. There are a pretty simple kind of chart here tonight on the Nasdaq. We have what is basically a bull market into a trading range, and we have the buyers rotating off of that low. And we talked a lot about this last night on the video. We know that these rotations off of the low can oftentimes produce a pretty strong, what I call a slingshot breakout. So buyers would love to get some breakouts going higher here. If you recall, we have a big gap up here to fill that that breakout target up around that 937.5. You go back in time, right? There's that big gap from back there after the beginning of the month. So we definitely have potential for this, again, bull market into a trading range. The buyers gobbled it up at the low, and they're pretty much now trying to punch this thing up through those highs, and I would imagine potentially up to that breakout target tomorrow, if not all the way to that 12,000 big round number. That is definitely something that bullish rotation can do. You can also see too, though, the second thing is we do have quite a bit of resistance up here, which definitely means we do need to get some pretty good pop, right? We're going to want to see quite a bit of strength on that breakout going higher. I definitely don't like the idea of selling into this move. If this was more of a bear market into a trading range, I would say, yeah, okay, we can sell resistance above that range because, of course, ranges act like magnets, right? So right now, though, we're a little bit too bullish at this point to try to sell off of that high. Buyers would love, of course, to buy the breakout. Buyers would love, of course, to buy some pullbacks down to these lows. I think buyers also have options at buying off of the 459 area as well. Sellers at this point, we don't have a lot of options right now to get short. Again, I'm not a huge fan of selling into the move going higher because of this bullishness we see right now. And as we go lower, this is where we start looking for longs back up into that range. So sellers really have to break down and really hold this if they want to be able to kind of earn our trust tomorrow going lower. And we've got last week's close down there, which seems to be a pretty far-fetched goal for tomorrow. But again, we get some news tomorrow. Think of that 320 area. That, of course, is that big low, that big kind of bloodbath low there that we had there a few days ago. So we know where the bears want to go. It's just we're going to have to see a little bit of strength here from these bears in order for us to really get anything good, I think, at this time. So knowing this information, how do we make some money on this on Friday? Well, first of all, because we're bullish, again, buyers want to be buying here either off this channel or down off these lows. Let's kind of talk about this here real quickly. As we pull back, right? As we pull back here right now, you'll notice I have a channel drawn off that high and off of that low, and I do have a battle zone, a buy zone right there. What's my problem, though, at this point? My problem is, of course, we're right in the middle of that range. My problem is the market will want to rotate back down to the low of that trading range. So I do like the fact that we have a strong spike, right? That's a pretty strong move right there. Anytime we see a strong move in one direction, we expect another leg in the same direction. So I'm open-minded to a long trade at this point. What I'd like to do, though, is try to trap in some of the sellers, because you would imagine, just like back here where we go up, we retest, and we come off that high, right? We go up, we retest, we may come back strong off that high. So as those bears come in and try to get short on this, I'm going to try to use their stops as fuel to kind of pinch or poke this thing going higher here. To do that, what I want to do is let the bears try a couple times. And the concern on this is that we're buying, of course, kind of relatively high here, right? Levels of resistance up overhead. So the way that you want to get in on a shallow pullback with what I call a trap setup, right? A trap setup off of this low. You can see a really good example down here where they run lower. The bears try once to go lower. They go higher, try twice, and see how they slide just below that low right there? That's the same basic idea of what I'm looking for here off the low of this new channel. I like that setup, but we got to see those. We have to use the bears stops as the catalyst here right now, trap them in, and of course run all their stops, right? Stops will be sitting right above that high, and we kind of blast off into those stop losses. I do like that pullback, that shallow pullback. Now, if we do end up going lower here now, right? If we go a little bit lower, now we have to be concerned with momentum. Momentum becomes a problem here because now we're rotating off the high. What you got to remember is ranges love to rotate, right? So as we go higher, we're expecting that roughly the amount we go above will be taking us down here. So we have a good idea of where the bears want to go, but as they get down there, now that momentum becomes a little bit more of a deal here, right? Becomes a bit more important. So just like back here, as we come off of that high, this is exactly where you start looking for this combination. Pay attention to this. This is a very, very important combination setup. I want to see bears try twice because, again, that rotation is pretty strong off that high. Once those bears try twice, now their stops are sitting right above that high here, right? We got trend lines coming in, lots of support levels with a range magnet up above. What we'll look for is that nice, easy signal. You'll learn more about that stuff in our free trading class on the website. And then as we go higher, here's where the fun starts. As we start going higher, now I can go in and grab a new channel off that high or grab a trend line off that high, find a channel off that low. And then, as I always like to do, I like to look left, get underneath that moving average, get underneath some prior swings. I like to look for trap setups, failure setups, pullback setups coming in off the moving average. And where do we think the market wants to go at that point? Right? It wants to go back out and take out that high. And again, potentially slingshot and break higher here. This is a really, really common sequence that we see here, right? We go down, the bears once, the bears twice, we pop up, we draw that channel, right? And we're buying that first test. The same sequence over here. We're looking for that over here. And remember, we're looking for failures off the low and then traps, failures, pullback combinations. Now, I know most of you guys and gals have taken the free trading course. You've learned all of these failure setups and traps and pullback setups. You know when to take them. You know the rules. You know where to look for the best ones. But listen, if you're here for the first time today, if you haven't taken that free course and learned all of these setups so you know the rules, so you can trade them on your own, what I'll do is I'll put a little link up here for you in the upper right hand corner. Grab that link, get registered for the free trading class on our website. If you hate missing the best trades each day, or you're taking too many losses, if you're not getting the results that you want, or maybe you're struggling to transition from full-time working to full-time trading, the roadmap that I teach in that free trading course will get you right on the right track and start getting you some good positive results out of your trading. So don't delay. Grab that link that popped up there. Get registered. You're going to love that free course. I've gotten so many amazing comments the last few weeks on our YouTube channel, right, on our email inboxes about people who are using that free class to make money on their own account, qualifying for some of those funded accounts. It's really been inspiring. So as the market goes lower, think about that here, right? So 1, 2, failure, back up and grab that channel. Right? So again, failure. Look at that here. Look at that here. Okay? We could easily end up down around these lows, and all of a sudden, 1, 2, failure, back up again. Same basic idea as we go, right? As we go lower. Now, as we go lower here, how do I sell it? Right? How do I sell it as it breaks down? How do I buy it as it pops higher here? Why don't we talk more about that stuff on the S&P, right? Because the S&P is pretty similar on this. So again, we're going to buy shallow pullbacks or traps, right? We're going to buy deeper pullbacks with 2, try failure into those hidden channels. And we'll talk about how to sell it down here, how to buy it as it goes higher. Let's keep going here. Over on the S&P. S&P, of course, is very similar to the Nasdaq. There's a little bit of difference. You can definitely see, first of all, we are definitely bullish right now on the S&P. It's a bullish range rotation. It's basically a pop-up into a trading range, pop up into a trading range. The market rotates lower, and now we have that rotation coming off the low. We've taken out that high, and you could definitely tell the buyers here are looking for that blast, right? That kind of pop, that slingshot breakout that we love so much in our trade room. So buyers looking for that pop and that run higher here. At the same time, you'll notice one very big difference between the Nasdaq and the S&P. We have a lot of open space above us here, whereas the Nasdaq has a ton of those resistance levels just overhead. And again, you can see where we're going here, right? We're trying to go back and take out, that was the FOMC high, right? That 38.42. And then if we keep going back, right, we get that gap way up there. Now that's obviously a pretty big chunk for a Friday, but that's where the buyers want to go, right? The buyers, of course, they want to finish off this rotation. They want to finish off that slingshot, punch this thing out, and I got some breakout targets up there at 38.50 half, 38.42 for these buyers. At the same time right now, the sellers right now, right? Sellers, again, like I mentioned before, they don't have a lot of options here. And again, because if we go higher here, I'm not trying to sell into that area. No way, right? If they go lower, I can't sell down here because, again, this is where you start having support, range above us. So we really got to be careful selling this market here for tomorrow. It can change, and obviously anything can happen, right? But as of right now, we know right now, we don't have a lot of options here for the bears. Now, on the S&P, and again, we've talked about this, right? We talked about the shallow pullback, the trap going higher. We talked about the deeper pullback, the 1, the 2, trapping those bears, get that failure, and then grab that, right? Grab that channel and grab that rotation. We've talked about this on the Nasdaq. Again, this setup on the Nasdaq and the S&P could also be down here. Okay, just kind of keep that same idea. And you can kind of see how this works, right? You can see how it goes lower. We pull back to the moving average once, twice, and then we're looking to, right, light that thing up as it runs back up into that trading range. Again, right, very, very similar here to the Nasdaq. So how do we buy the breakout right now? How do we buy the breakout? This will also apply to the S&P, to the Nasdaq as well. What if we get that 2-try trap and we blast, right? What if we get this slingshot breakout going higher here? There are a couple easy breakout patterns that you want to think about. You ready? One of them, which is my favorite right now, is that pop and grind breakout. So now they hold it and they jump. We jump up and we begin to grind. These are very common right now, and they'll probably be even more common as we go into the month of July because volume does tend to slow down a little bit the month of July and August. I'm going to draw a trend line right off that high. I'm going to draw a trend line or take that trend line, copy it down to that low, and find what we call a hidden channel. Then what I'll do is I'm going to look left. I'm going to mark up prior swings. And those prior swings basically are kind of where I want to be looking for the entry. I want to get underneath a prior swing, ideally. Worst case scenario, I want to get underneath the moving average. I can use a trap setup below a prior swing. I can try to trap in the bears off the moving average with a failure, right? Like that. Or I can then look for the breakout pull back off the moving average. Okay, again, we're looking for that shallow pullback, but if it breaks and pops and runs, get underneath prior swings for a trap, grab that failure off the moving average, and hit it again with that pullback as we go. Where do we think the market wants to go? We got a pretty good feeling for that 38.43 to 38.50 area. Remember, one easy way to really dial in these targets is the first leg and the third leg. Okay, these are very, very common. First leg, third leg. So we get that pop, mark up that pop leg, and then that will oftentimes be the final, couple drops of profit you can squeeze out of those moves, and that'll tell you when to stop buying at the same time there, right? So keep that on your radar. I love these pop and grind channels right now. Very, very good stuff in our trade room. Next one is a 1-2-3 breakout, right? Next one's a 1-2-3. These ones are really, really easy. We take out the high, we pull back to the moving average, and we jump, right? We jump off that moving average. These are really easy, right? Now, we might get one right here, right? We might get a big run higher here. And that might become a new channel off that high, off that low, find those prior swings, get that pullback to the low of that channel, right? That'll put us now with traps, with failures, with pullback combinations. Okay, that is one way to do it. What is probably more likely, though, is to get something like this, where it's a strong move up. They want to retest the high. They get that retest of the high. We then pull back. The buyers then jump off the moving average there. And now we're looking for a little bit tinier, a little bit more aggressive channel. What I found in my kind of, almost 15 years of experience is that bigger channels are not usually the better channels. The smaller, more kind of recent channels are the ones that usually give you the best entry results. And so again, same idea, right? This is called a 1, 2, 3 breakout pattern. And then now we can look for that trap or failure or pullback, right? I won't keep repeating that over and over again, I promise, right? So that is also a 1, 2, 3 breakout going higher as well. And then because there's all this open space up here, and because we have some Fed speak, because we have some news tomorrow, keep your eyes open for that 2-try breakout. 2-try breakouts are simple pattern setups. Strong pop, shallow pullback to the moving average, higher high in price. What do we always say? Traps, baby, traps, baby. This is a very easy setup. The one thing about this setup, though, is it needs to really pop. You know what I mean? It needs to really pop like this. Right? It needs to really pop. Okay, now this one you can see didn't give you that, right? It didn't give you that. You could also say, though, that was a pop, shallow pullback, higher high, and surprise, surprise, traps, baby, right? Obviously on a bigger, right, on a bigger scale there. Same basic idea here. You know what I mean? Same basic idea there. So strong pop up, separates off the moving average, high, shallow pullback, drives the pullback traders crazy. That gets the FOMO going. Right? The higher high confirms it's not just a V top and headed back down into that trading range. I love those 2-try breakouts, 2-try traps. And by the way, don't forget, if you can combine them off a channel, then absolutely do. They're not required. The channel's not required, but you can really blend a couple of these techniques together here as you go here. I really like those breakouts going higher here. So remember, all three of those breakout patterns can definitely be applied to the NASDAQ as well. So everything I'm talking about here tonight can be kind of interchangeable between the NASDAQ and the S&P. Okay, now we have the tough stuff. As we go lower, we've already talked about how to buy that 2-try failure, how to load up that new channel, and trade that rotation back up, okay? We've already talked about that a few times. Those are some really easy, kind of pattern setups that we see quite a bit. I can do it here. I can do it here. Now, how do we sell it as it goes lower? Again, I don't like the idea of selling it off that high. It's going to be difficult to justify that short in this current situation. Now, as we go lower, we need to literally get ourselves down around these lows. We have to hold a pullback, and we have to pretty much jump to those lows, right? Something really has to come out. First of all, we have to get the rotation down to that low. But now, instead of the bears coming in and struggling, now what happens is the bears come in and they hold. And obviously at this point now, something will likely be happening in the markets at this point. Headlines will be saying, markets are selling off because of this and that and this. Fed's Bullard says that. New home sales do this. There's going to be blood in the streets at that point. There'll be some big theme on the news wires that will be causing everybody to freak out. And again, it might happen because of that Fed speech, right? Bullard speaking at 6:15. He could easily trigger this sell-off, right? Or this failure to hold these lows. And so if they hold this pullback and they blast, you know what I mean? They really blast off that low. This is where you want to remember, anytime we have a strong move in one direction, we expect a pullback and a retest of that low. So at this point, we go 1, 2, 3, right? Blast off that moving. Now, remember, it doesn't matter how strong the pullback is. They have to hold and go. If they don't hold and go, we're going to get dragged right back up into that range. It's one of my favorite trades. Okay, so don't get fooled. Just because it moves quickly down here does not mean it's going to keep going lower. So promise me you're not going to get fooled by that little trap right there. Now, mark off that low, mark off that high. And then in this one, what you really want to kind of think about here is you want to try to obviously get that short off the high of that. But remember, in these situations, there's still a range up here. There's still a range above us. So we oftentimes see stuff like this where we'll get that short off the top of that channel. They'll retest the low. And then after that, after the bears kind of get that out of their system, then we get the bears once, twice, and now we can rip it right back up into that trading range. Okay, so this is a very good possibility if we get a real strong breakout going lower. Does that make sense? So we see a real strong pop down, real strong pop. They hold it. They jump off that moving average. Once they jump off the EMA, now we know, okay, now grab that trap, grab that failure, grab that pullback off the high of that channel. Okay, take a good chunk of profit off at that low because that is mission accomplished, or what they're trying to, the objective trying to accomplish. If they keep going from there, then we start looking for more. But if they stall at those lows, now we look for those failures to run it back up into that trading range. I would also keep in mind too, let's say, for example, we get that real strong move down. Bullard says something crazy. The markets freak out, right? News comes in, horrible. Everybody's screaming, right? You know what I mean? That's the type of sentiment that will be in the market when this happens. At this point now, they don't pull back and blast. They pull back a little bit and they start to grind down. These are some of the easiest ones because then you really know what's going on. That grind is the giveaway. Okay, that grind is all the buyers getting the heck out of the way. And so when they grind like that, that's why I said I love these types of channels. I can draw a trend line off that low, up around that high. The hardest part about these is that you don't want to chase them. Because what's going to happen is traders will come in, they'll say, oh shoot, this is way too low. I don't want to sell down here now. I'd like to sell up here. And so we start thinking, okay, can I get a trap up here somehow? Can I get above one of these prior swings? Can I get above the moving average? I like to draw my channels backwards and try to make the channel just a little bit above the moving average. That way I can go in, I can trap in those buyers and use their stops as fuel. Okay, so kind of keep that on your radar. Now, if they really blast this thing going lower, right, then we know where they're trying to go. They're trying to take out those lows here. You've got that big low, that 93.25 low. You got last week's close. If this thing turns into a bloodbath going lower tomorrow, last week's close is absolutely where they're hunting for because remember, as we get into the end of this week, last week's closing price becomes a very big psychological magnet. And again, this just happens to run right into that big low that we saw earlier in the week. There's a big range down there, of course, right? You got to think this whole area down there will be easy targets if this thing starts to roll over and run lower. So on the S&P and the Nasdaq, we can't really sell off the high right now because we've just seen time and time again the last couple of days, the buyers are here. They're defending it. We talked about this last night. Even though we want to sell short right now, the buyers are doing a very good job at defending it. So we have to, the only way to really get a good quality short on this is to get back down to those lows and really show me you actually have this and can take this thing lower. Then we can start to go out, find those channels, and we can start to get those shorts going right off of that low. And again, on both of these, don't be surprised if we see a nice strong pop, a run lower, get that short just a little bit underneath that trading range, right? We retest those lows, and then, 10:15, 10:30, 10:45, it's 1, it's 2, and it's bam, right back up into that range here. We see a lot of those little oops-a-daisy, gotcha, and then back up into that range. This could honestly be the best trade of the day tomorrow. If they take this lower overnight, that could easily be the biggest trade of the day tomorrow, as it snaps back up into that juicy range at 37.80, 37.78. So lots of great trades. Not as many short trades right now, but again, that can easily change here with a Fed speaker tomorrow and, of course, new home sales at 10 o'clock Eastern time. Let's wrap things up here now, shall we, on the oil. Oil is a little bit like the inverse of the E-mini S&P and the E-mini Nasdaq. Crude oil, of course, a lot of my students will trade the micro crude oil. They'll trade the USO, which is the ETF counterpart. Lots of ways in which you can use this analysis to make money. On the oil, what's the most important factor right now? Well, it's kind of the opposite, right? It's a bear market into a trading range. Ranges, of course, are magnets, and price likes to rotate. We rotate down, we rotate up, right? We rotate back and forth. Right now, from what we know right now, the sellers are rotating off of that low. Okay. Now, if they're lucky, they'll break out of that low, right? With that kind of slingshot breakout. Again, think of the opposite direction of the E-minis, and looky, what we have down here, there's that big round number at 100, the kind of the granddaddy of all big round numbers. Yeah, it really is. And of course, the breakout target at 90, 98, we'll call it 99, right? That breakout target down there. That is also a very important part of this, is support levels below. So you could easily think here that buyers, right? Buyers would love to buy off of that low, because the range. Buyers would love to buy. I think buyers, and just like we mentioned before in the S&P, I think we might easily see a breakout going lower. And then maybe as the day gets older tomorrow, it starts to evaporate and whoop right back up into that range again. Whenever I see kind of big support levels with a range above us, I think about that. Okay, can I get a breakout going lower? And then can we maybe wait around for that run back up into that range? Very, very profitable trades on that potential for tomorrow. But, again, buyers want to buy off that low. Buyers want to buy back in this area. Also, too, think if the market goes higher right now. If the market goes higher, what does that tell us? It tells us that the sellers have failed rotation. Remember, ranges and range rotation are a huge part of what we do as traders. We know that as the market rotates off the high, it's going to want to go back to the low. As it rotates off the low, it wants to go back to the high, vice versa. So we should be looking to take out at least some of these levels here tomorrow. If we don't make it lower here right now and the market goes higher, what does that tell you? It's a huge failed rotation. It's a huge embarrassment of failure for the sellers. And of course, you can see right above us, we have last week's close, easy magnet on a Friday, and we get a breakout target. Unfortunately, to be the bearer of bad news, but all the way back up at 110.75 there, which, by the way, is that big top, right? This would make perfect sense if the buyers could hold on, if the buyers can take control of this. It would make perfect sense to end up right around that 111, 110 area, prior low, prior high, big round number. So we definitely have some good targets there for the buyers. How about the sellers right now? The bears have really just the same problem that we had on the S&P. If the market goes higher here right now, I can't sell that. It'll be a big time failure for the Bears. I can't sell that, right? We can actually get pretty aggressive on that long. If we go lower here, I can't sell down here. They have to get me a real strong push, and then I can think about being a seller. But I'm telling you right now, though, we have to really get that strong pop and then hold the pullback, just what we talked about on the S&P. So now we kind of have a good idea what the game plan is, and now you can kind of see how this will all, kind of come together here. How about if it goes higher? If it goes higher, this is where all of our preparation so far comes into play. So let's say, for example, right, we pop up and grind. Very, very easy giveaway. Mark that high, mark that low, drill down, find that trap. And again, I say traps. Those are my favorites. You'll learn a lot about traps. You'll see a lot of examples of traps in that free trading course that's linked up in the upper right-hand corner. That's a great setup off of that low. Remember, first leg, third leg will give you a good fine-tune exit. But again, you got 110, you got 110.28, 111.17 is kind of that ideal target as we go higher here. Or do we pop up Do we hold the pullback? And do we blast, right? Jump. Now again, it doesn't matter how strong the move is. It doesn't matter how strong that move is. You've got to hold that pullback. If you ain't holding that pullback, we're not buying, right? That's the reality of it. Don't be surprised. Don't be surprised if they go up and they manage to hold it. All right? I'm not in the business of guessing or predicting. I want to see them go up. I want to see them prove to us they can hold, right, and jump. Once we get that jump off the moving average, now it's on. Now we draw trend lines off that high, find that channel, look for those prior swings, get those traps, get those failures, any of the price action setups you guys learned in that free trading course. Okay, that's an easy one. Also, two-try breakout, strong pop, right? Strong pop. What do we say? Shallow pullback, higher high in price, traps, baby. These are great setups. I mean, again, we get these quite a bit. And if it really kind of rips through that high here, this would be a good one on the way back up to 110 as we go. All right, so definitely keep your eyes on those breakouts going higher here. As we go lower, what's my concern to be a buyer here? What's my concern? Momentum, right? Momentum. So just like always, and we get a strong move down, we wait for the pullback to the moving average. 1, 2, back up, find that channel, right, and grab that, right, and grab that move going higher. So as we go lower here, the good news is this trend line is still a ways away. You know, that trend line has the potential to be a bit of a pain in the butt, right? But luckily in this example today, it's a good ways away here. So as we pull back now we're at support with a range above us, but we are in a bear market. So because of that bearish momentum now, this is where the two-try failure pattern comes into play. Bears try once, bears try twice. Think about where their stops are. Think about where their pain is, right? That's the key to these. I can draw a trend line off of that low. I can look for a trap entry off of that low. I just want to make sure I get those two tries. You'll learn a lot more about the advanced tactics of the two-try. There's a bunch of advanced ways we can take these trades. I cover those in more detail in our video classes. So definitely get registered as a member, and you're going to love that video course. So one try, two try, and then again we'll try to get that right. Get those stops to get run. And then same thing. As it goes higher here, watch that nice strong reversal off of that low. That gets the momentum going. Then we simply go out, draw the trend off the high, draw it off that low. And as we always say, first test is the best test, right? First test is the best test. Now, if we're lucky, this may come in and we might get that right off that trend line. So keep your eyes on that trend line and try to use it as a level of support and ultimately, right, for the entry on that first channel test. So again, failure off that low, and then trade the turn as we go higher. Remember too, where does the market want to go at that point? It wants to take out those highs. So leave that runner, leave a little piece open, and see if you can grab that slingshot back up in the opposite direction. And then just like on the E-minis, if we were to see this thing take out that low, bears come in, they hold the pullback, and they blast, right? They really punch and go lower. Whenever we have a strong move in one direction, we know we're going to probably get a retest of that low. This is where we start to scalp, right? We use half size, quarter size. We go in. We know we have support down here, but we know that we have a big, strong pop going lower. I can take that trap, that failure for that retest, and then watch from there, right? Watch and see what happens once they get that retest here now, right? Once they get that retest and they start to kind of stall out a little bit. Again, we got a lot of support down here with a range above us. This could easily be one of the best trades of the session tomorrow where the bears come in. These are the weak hands now, right? These are the traders who should not be trading at this point. Okay, at this point now, we've already had that retest. The bears already got what they wanted. We're at support below the range. We're not continuing to go through the low, right? We've retested that low, and now we're starting to spin our wheels. Now the bears try once, they try twice. Think about where their stops are. Light up those stops for an easy run going higher, and then find that channel and dig in and grab it on the way back up into that trading range. Again, these little breakouts into snapback reversals could really be, it could be a 15 or 20x trade tomorrow to finish off the week here for you. And speaking of finish off the week, it's been a really good week. We had a really good day today in our trade room, looking for more good trades tomorrow. Hopefully, I will see you there trading right along with us. If you're looking for a great place to learn and trade along, if you're making too many mental mistakes or taking too many losses, or if you hate the fact that you're missing all the best moves each day, what are you waiting for? Get registered, start with a free trading class to learn the basics, and then come out and let's start hitting some home runs together in our trade room. I'm going to put all the links you guys need in the description of the YouTube video, so grab those links, get registered, and don't be afraid to call the office. That phone number there, I'm always there if you guys need help with anything. We can talk about getting your computer ready to go, getting your brokerage account ready to go. Whatever questions you may have there, I've been more than happy to answer. We also, of course, have live chat on the website too. We're always kind of watching that as well. So don't be afraid to reach out and ask questions. And again, as always, you can drop a question in the comment section. And hopefully by now, I've earned a like and a subscribe to our channel. As you can see, we're bringing the fire every evening on this video newsletter. But enough of the another video tonight, though. Have a great rest of your evening. Get some rest. Get a big day tomorrow to finish up the week. We only need a couple of those failure trades to make our entire week tomorrow. So looking forward to those setups tomorrow with you guys in the trade room. All right, guys, I'm out of here for now. Be well, be nice to each other, and you better be back here next time. All right, guys, adios, amigos. Bye-bye for now.